Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So, do you need a W-2? Do you need a 1040? Do you need any type of a 1099? Do you need any type of taxes to go ahead and get a mortgage? No, absolutely not. So this is going to be an updated video on something that we have to offer that's actually called a bank statement loan, where we just qualify you based off of your bank statement loans. And not only am I going to go ahead and tell you exactly the requirements of a bank statement loans, we're going to go ahead and price one out too, because you know what? That's just a great guy that I am. As I have never seen that done on YouTube. I don't know anybody else who does that. And we are going to go ahead and do that, god damn it, because that's how we roll. Okay, so what's a bank statement loan? Initially, it's the easiest loan out there, okay? Kind of, sort of. It depends on like where you end up going on the bank statement loans, and it depends on how crazy you get with your bank statements. But a bank statement loan, what is a qualification for it? Well, it's your credit score and your bank statements. That's all we need. I don't need anything else other than that. The less is more. So the thing that we have now that is updated here in April 2022 is that there is no mortgage insurance on anything when it comes to bank statement loans. Now, these are loans that could go up to 30-year fixed. This is a bank statement loan could actually be done on any type of refinance or cash out refinance. Self-employed borrowers are the only people that are allowed to go ahead and apply for these types of loans. That's it. Nothing more, nothing less, unless you're a self-employed borrower and you also have a regular job, but you just want to use your self-employment as you do you, however you like. But for the sake of this argument, we're going to go ahead and say that self-employed borrowers only. But this is on personal residence too, your primary residence. Are there bank statement loans on investment properties? Are there bank statement loans as far as any type of, non-qualified mortgage? Absolutely. But for the sake of this argument, we are only going to do it with this one wholesaler because they updated with no MI. There is a minimum FICO score. Minimum FICO score on this is going to be 640. And the reason why the no mortgage insurance is a big deal, because this is actually a 10% down program. That's why there's no mortgage insurance. That's why this is a big deal. And that's why this program is awesome, especially if you're a self-employed borrower and you don't want to put that 20% down. You want to go ahead and put 10% down, but you do not want to worry about mortgage insurance. Well, we got you. Max debt to income. So what's a debt to income and how do you calculate it? Well, you could go ahead and do it yourself. Well, I'll put a link in the description below. You can go into my website. You could actually see what your debt to income is. You could see, and you go to how much house can I afford. You could do all of that right below it. So the max debt to income. Debt to income is going to be your principal, interest, taxes, and insurance. And it's going to be all your liabilities, like your car payments, child support, credit cards, anything that is going to have a balance that shows up on your credit report for a prolonged period of time. That is what we're going to go ahead and need. And if you have something, do not do this, okay? Don't do one of those installment pays, because even though if it doesn't show up on your credit report, we will see it on your bank statement, and that is going to be a bitch. But this is a non-QM product. What is the minimum amount of time that we need as far as the bank statement loans? The minimum is going to be for 12 months. Now, in essence, that is going to be the easiest way to go ahead and do it. But as far as the self-employment goes, how do we know that you are self-employed? How do we know how much you make? How do we know any of that? Well, we're going to have a really, really long talk with your CPA. Your CPA is going to be your best friend. So your CPA is going to go ahead and give us a letter that shows A, that your employment status is, of course, self-employed, and then B, that you actually own at least 25% of the company that we are going to go ahead and qualify you for on the bank statement loan. But now that we got all of that out of the way, sheet is done. Let's go ahead and price out a loan and see exactly how much this son of a bitch costs. All right, now we're recording. Okay, so this is going to be exactly how we originate these loans. So for the sake of argument, we're just going to go ahead and, of course, I'll be the loan officer. We're actually going to change this to a single family residence, because we don't want to worry about anything else. And we're going to do a monthly income of, let's just say it's 10 grand. Monthly debt is going to be 1,000. Taxes annual will be 13,000. Homeowner insurance, let's just say 1,200, and no finance charges. Now this will be a sale price of 750,000. That's what it appraised for. 60%. Now we are going to change this to 90% loan to value, and what we are going to do is we're going to go ahead and say that we have 24 months worth of bank statements. Now let's see if I know it doesn't require, I'm not really putting much of anything. Oh, wait a minute. I messed that up. I didn't put that there. Let's go ahead and get a quote. Now this is going to be on a purchase, 12 months worth of bank statements, and this is going to be at a 740 credit score with a 30-day lock on it. So what we're going to do is we're going to go ahead and come down to any one of these products. Now this is going to be best option is going to be, it's going to be a toss-up between any one of these. So to see exactly what the rates are on all of this, and I know that this is probably going to be a little confusing to some this actually makes a whole lot of sense. Now, principal and interest at 5.25%, that is going to be, if we come down over here, that is going to be a credit of $1,167. Now, this is also without any origination charges, so there will be origination charges that'll be entwined with this, but for the sake of argument, let's just go ahead and go from here. That'll show you exactly how much it would cost to go ahead and get this loan. So we are at 5.25. Now your principal and interest payment is going to be $5,700 or $3,727.37, and then we are going to come down over here. Like, what happens if we take the lowest rate possible? If we took the lowest rate possible, or the highest rate possible, you would actually get $20,250. Now, of course, origination charges have not been included into this. That'll drop this down significantly. But if you want to go ahead and go to the highest rate or the lowest rate, if you wanted to purchase it, now this is going to be based off of a $750,000 sale price, loan amount at $675. That will actually be a cost of $57,476.25. Ouch. That's a pretty penny. But your total principal and interest payments will only be $3,031.05. Now, will you be saving that much money from that all the way over to this? I guess that would be, let's see, what is the difference? So that is going to be a $1,300 difference. $1,300 difference. We're going to go ahead and go here. We're going to go calculator. So if we come down over here, do the calculator, so $1,300, now times that by fully amortized 360 payments, which is a 30-year mortgage, that'll be $46,400. Wait, what am I doing here? $1,300 times 360 payments. Yes, it's worth it. Is that right? 1,300 times 360. Is that $468,000? Yes, it is worth the price. Buy it. Pay the $57,000, save up, pay the $57,000 and get that rate. 3.5%. That's what I would do if I had the money. But if I didn't have it, 360 payments, $1,300 a month, that is a lot of money. That is a lot of money. That's a difference between a 3.5% to a 6.7%. That is crazy. Yes, buying down the rate sometimes makes a lot of sense, especially if your loan amount is this high. These are higher loan amounts, and especially since you're putting less down payment. So if I were in this situation, what I would do is I would go ahead and take the lowest down payment, put it towards the rate, kind of just go ahead and go from there, because that is a crazy difference between interest rate on one versus another. But there you go. That's how much it cost to go ahead. Let me stop the recording. So that is actually how much it would go ahead and charge to go ahead and get 3.5% versus a 6.7%. You see how rates change the whole, like if you do the numbers on one percentage rate to another percentage rate, how much of a difference between cost of one is to another, and how much, like those two prices, 3.5% to the sixes, that was a $1,300 difference in the course of a month. That is almost $500,000 in interest that you would pay in addition. Well, it's $500,000 in addition that you would go ahead and pay over the life of the loan, one versus the other. That's a huge difference. That's why people are always asking, like, hey, homes are overinflated. They were a thing. This was last year, of course, in 2021. They were like, hey, should I buy? Yeah, you should have bought. You definitely should have bought. Yeah, everything was much more expensive, but you now look at what you're gonna do. Home prices haven't gone down. Now, will home prices come down? Who knows? But as far as bank statement loans, this is going to be your updated mortgage on bank statement loans. If you are a self-employed borrower, we got you. Well, up to 50% commission rebate, 0% listing fee on purchasing your next house or selling your next house, or any mortgaging assistance. Link in the description below. Until next video, guys, I hope you enjoyed this video. $468,000. That's a lot of money, son of a... Jesus Christ almighty. That kind of gave me bubble guts a little bit. Well, like, subscribe, comment, all that good stuff. Until next video, guys, I really appreciate you watching.